This is my third video of the day. And why do I suddenly publish so many videos when it's usually just one video daily? It's because a price rally like this here, it does create a lot of attention. So the last two videos that I've published were the top one among the last 10 that I've done. So when the price moves up like this, a lot of eyeballs get onto crypto, get onto Bitcoin. Now, why is this so interesting? Why am I sharing this? It's because this rally is obviously not driven by a sudden retail sentiment change, right? It's not just retail that suddenly thinks, oh, wow, we've found the floor now, and now we have to all buy and we all FOMO in. This is not what triggered this rally. What triggered the rally was rather the opposite. There was a lot of pessimism among retail, right? Retail was thinking, hey, maybe Binance might go bust. Maybe Grayscale could have something that might be revealed. Maybe we get another issue with Tether, right? So a lot of potential black swans. So there was a lot of shorting happening. Now, when there's an overhang of shorts, there are whales that try to liquidate those shorts. Okay, so in case you're not really familiar with this whole concept, feel free to watch the prior video. But short liquidations push up the price. The whales artificially inflate the price. Now, the point here is it's artificial, okay? So they push up the price temporarily to get all these fees, but then they have to sell off again, right? They don't want to hold it. They simply just wanted to elevate it short term, to liquidate, to get the fees. Now, this would indicate that the price should be falling again. The problem is that short squeezes tend to also start bull runs. They tend to stop bear markets. In the past, and I remember this very vividly, in the past we had something very, very similar in 2018 when we moved from 4K to 5K. Here, look at this very, very quick increase. This was not retail driven. This was also a short squeeze. Now, why did the price afterwards here not collapse? Why did it continue to rise? I'm not saying this will repeat, right? But I simply just want to show the mechanics here. It did not collapse, even though it was artificially inflated. It did not collapse afterwards because all of the additional attention that this rally here created, there was so much attention that retail came in and they bought in. They FOMO'd in. They kept the price high. So even though the whale might have been dumping over here after they got all their short liquidation fees, retail stepped in and bought up at these high prices because they now thought we have seen the bottom in Bitcoin and we can rally again. And this is then what subsequently really happened, right? This is then where we moved from 4K all the way to 13K, or from 5 to 13K. So this is the thing where it gets a bit complex, right? A bit complicated. Even though we have seen a short squeeze very likely here, even though it's not retail that's suddenly buying up all of those Bitcoin and canceling out this whole FTX collapse crash, even though that's not the case, this might still somewhat revive some interest by retail. And we also get the headwind from traditional finance, right? With monetary tightening potentially stopping now. So this is simply the mechanics I want to explain here. If the price is depressed enough, if the diamond hands haven't sold for quite a long time, if Bitcoin is relatively illiquid and it's now in the hands of the manipulators, so to speak, and if the manipulators can push up the price high enough to create that much attention that a real floor is being established, then this could actually be the bottom. Not saying it has to be, but it could be, right? If traditional finance doesn't push us completely down and we get into a crazy recession similar to the global financial crisis, but if we actually can somewhat stabilize in traditional finance, all the tourists are now out of crypto, right? There is not a lot of short-term speculation in crypto at all, especially in Bitcoin. If you're now still speculating in crypto in general, you're probably still doing it with altcoins because they are still somewhat volatile. You are not speculating with Bitcoin. There are very few people that speculate with Bitcoin because it's not volatile enough. So the number of transactions on the Bitcoin network are at very, very low levels. And the wallets that are actively trading as a percentage of all of the wallets in Bitcoin is very, very low. So most wallets, 2/3 actually, have not moved their Bitcoin for at least 1 year. So this is how we can see Bitcoin is relatively illiquid. There is not a lot of sell pressure anymore. We have already depressed quite a bit. And so the remaining Bitcoin that's still floating around can now be manipulated in terms of price comparatively easily. You can move a lot of market cap with comparatively little capital, which then obviously leads to things like this. So let's see how much attention this really brings back, right? If this can somewhat stay at these levels and we're not going to crash down, and we see further of these short liquidations because people don't trust this rally, right? And again, we see another push by the whales, and the whales is simply just liquidate and liquidate and liquidate. We will see some kind of a step function in the price where we short term push up, and then we see a little bit of a blip down again, a little bit of pessimism, then we push up again, and then at a certain point in time, retail might be coming back. Of course, this is kind of like what we all wish for. If you want to make money with all of this, right, you obviously have to be against the grain. You have to do exactly the opposite of what the masses do, right? So when the masses are all shorting right now, when the masses are all betting on falling prices, you want to be betting on rising prices and vice versa. In the macro picture, of course, we are now still depressed. We are not expensive at all, even after this rally. So buying now, waiting for several years, selling then is likely going to play out. At least that's what I personally believe, simply because there's not so much speculative sell pressure on Bitcoin. So that should work out. Very short term, it's very hard to say. It really depends on how much attention this will bring. This does bring now some kind of attention. That's why I make my third video. But let's see how sustainable this actually is, right? Let's see if also mass media will jump on this. Let's see if there's at least comparable eyeballs on this, similar to the FTX collapse, because we have basically, in terms of significance, we have basically done the same thing in reverse that we have seen with FTX collapsing, right? All of these eyeballs on Sam Bankman-Fried and all the fraud, etc., all of these eyeballs that created all of this down pressure, it has been completely reversed in the last few days. So maybe this can bring back some kind of excitement. Let's all touch wood that it does. If it doesn't, also no big problem, right? If you are long enough of, if you have long enough of a time horizon, you're an investor that really just allocates and don't just speculate on the short-term movements, then you should be okay with any outcome. The longer we are at these depressed levels, the longer you can dollar cost average in, the more you can take advantage of these low prices and then actually really benefit from the rally that I think inevitably will come at some point due to the tokenomics, right? Tokenomics of fiat are way worse than tokenomics of Bitcoin. The inflation is very, very different. The monetary printing is very, very different. So it's just a matter of time, in my opinion, until people will again realize that Bitcoin is not just a form of speculating with your money and of riding the waves. You can do this, but you can also simply just do it to park your money if you just hold your capital in Bitcoin for at least 5-6 years or so, right? You need to have even less of a time horizon than with stocks or with property, which is very, very attractive, especially given that the growth rate of Bitcoin compared to other assets tends to be higher because it is still a comparatively small asset, right? It's not being held by that many people. We in our little bit of a bubble, we might think Bitcoin is already used everywhere, but that's definitely not the case. Traditional stocks, etc., are being invested in way, way more. And the risk versus reward over the long term even, I think, is way better for Bitcoin, especially at these current prices, right? No financial advice. I'm simply just sharing what I personally do, and I very much believe in this. That's why the channel is also called the way it is, right? It's not called altcoin trading speculative strategy. This thing is simply called Bitcoin strategy because that's really the one asset I believe is differentiating itself very much from the rest of crypto land. And yeah, I think risk versus reward is very positive for Bitcoin. If you buy an altcoin, you don't really know, will it be part of the next bull run? For Bitcoin, you can be relatively safe that it will. The question is will it pump as much as any random altcoin? At the beginning, probably it will. Once we are at elevated levels at 50, 60K, maybe not anymore. Maybe then the altcoins come back. But at the beginning of any bull run, usually it's Bitcoin that outruns everything else. And that's also what we currently see over here. Feel free to share this with your friends in case you want them to also get involved in Bitcoin, right? Nobody has eyeballs now on crypto, but now's the time to actually look at it, right? So feel free to share this. Feel free, obviously, also to give your comments. It helps the algorithm. Same with the like. Thanks for watching and see you in the next video. Bye-bye.